Sunday morning, and once again, the SMF Pro Trader Schools in 7-day action. And during the live trading week through Monday through Friday, we're trading with real live entries, real live exits with profit and losses. And then on Saturday and Sundays, we even go a step further. And that step further is the dedication and the time to our SMF Pro Trading students and taking the time to walk them through their yearly apprenticeship program and understanding. The understanding is that there are so many things to learn about the market and so many gimmicks and so many little tricks and things that happen is that we have to spend those days doing what we've been doing. We started at 7 o'clock this morning. It's now 11:30. We put in 4.5 hours. Today, yesterday on Saturday, we put in 4 hours. We had the radio show there. You can go to stockmarketfunding.com. This is called the VXN, and it's the volatility index. And in 2008, we broke higher, and the markets went into a tailspin. Once that put in a high, and in 2009, it's a lagging indicator. It popped up. All of that 2009 move, you went straight down, and markets went straight up. And back in October, we bought this. We said, bam, we bought calls here. You can buy calls on these indexes. You can use it to hedge your portfolio. There's all kinds of neat little tricks to do. Now, it's called Nasdaq 100 Volatility Index. And it equals the NDX 100 and, to a degree, the overall Nasdaq comp. And basically, in January, when we called the market top and shorted the Nasdaq 100 buying put options, we went long these call options here against it, and they both worked seamlessly together. When this goes down, that means that the markets go higher, and that's what they've done since we called the bottom on January 31 and 2/5. It was 5 weeks ago this last Friday when we said the market had put in a bottom. What I want people to know here, just like I taught you on the VIX, same rule, same everything. And what you need to know is this. This is a very, 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 very long-term bottom. And the last time that we were at this bottom, before the markets ever went in their tailspin, let's go back over here. This was 7/15 of 2000. And this is called a double bottom. We went straight up and the markets had a haircut in January and sold off. They lagged the indicator a little bit, but it doesn't matter. We've come down to this double bottom. What I will tell people is that we look at the weekly, we look at the daily, and we actually use 3-minute, 15, and 60-minute charts during our intraday entries and exits because it moves intraday and it tells us how long we should be long or when we should be short. When this goes up, equities go down. When this goes down, then the index goes up. And we've come all the way down off of that big breakout. Could have made a lot of money buying the VXN calls. And we've come all the way down and we've got an uptick. And we're going into an options expiration. And if this bottom is not broke, there won't be that much room left to the upside toward the resistance levels in the Nasdaq comp and Nasdaq 100. Because we'll go up, but then what will happen is we'll sell off. We'll go up and we'll sell off. And we'll be in a range. If this starts to build a base down here and starts to uptick, then the broader Nasdaq 100 and Nasdaq comp will be weak up toward their topping pattern that we have in each one of these indexes. So the key here, folks, and you've been given a gift because I care about you and your IRA and your 401k. If you're so blessed to be able to look at the chart, is that if we don't break this trend line here, and we start to go up, that means that you should be selling your positions into strength. On the other hand, if we break that support level and we go down, then you can let your positions continue to run a little bit higher. If we start to build a base here, that means that the markets are putting in a resistance top. You could put in a 4-week top at resistance or a 3-week top, and you could be putting in a 2 or 3 week bottom down here. They will work totally invert of each other. You've been given a gift. And the part of that gift is that we use this very same chart when we're going long and short equities or buying calls and puts. Here's the VXN right here on a 3-minute. And just to give you an idea, that when this was breaking out on a 3-minute level, when this breaks out, and you're long, if you want to be short stocks intraday when this is breaking higher. When this is going down, you want to be buying the dips on stocks and let stocks go up higher. Because when this goes down on a 3-minute level, the stocks find support and they tick upward. Okay, from an intraday level. I'm just throwing this little piece in here to let you know if you ever want to come to one of our free 5-day trials at stockmarketfunding.com and watch us live in action or watch our trading videos on stockmarketfunding.com or dailystockcharts.com. Click on the online trading community link up on top of the homepage. Get involved. We're giving you a gift. The gift is if we don't break lower and we set up and we start to break higher, and if you're holding positions, start scaling out of your risk. And we have over 150 proprietary risk management, different type of trading tools that you can employ during these times. Not just on this one, but many others. And you can be diversified in your risk management. Take action, take control, take responsibility. Let's be accountable for you, meaning you need to be accountable for you. I'm just here to let you know that there is lots of things that you can do and what to be aware of.